the top 3 financial markets in the world, and why Nigeria is a rising star. Welcome back to Sheddy Media. In today's episode, we're diving into the top 3 financial markets in the world. From Wall Street to Lagos to Tokyo, we're covering what's moving markets and where the biggest opportunities are. Let's jump in. When we talk about global finance, we start with the biggest player, the United States. The S&P 500 index tracks the 500 largest companies listed in America. You know these names: Apple, Microsoft, Amazon, Google. They drive the US market and in many ways, the global economy. As of mid-2025, the S&P 500 is at around 617 per share, up modestly for the year. What's powering this? Tech sector dominance. Corporate earnings remain strong. Investors expect interest rate cuts later this year. Now, the US Federal Reserve has kept interest rates high to fight inflation, but inflation is finally cooling. This gives investors hope, and hope fuels growth. The S&P is more than just a number. It's a thermometer for the health of the world's largest economy. If it's up, people feel good. If it's down, global markets usually follow. Now, let's head to Africa, specifically Nigeria. Nigeria's stock market, the Nigerian Exchange Group, NGX, has been one of the best performing markets in the world in 2025. Yes, you heard that right. Its main index, the All-Share Index, hit record highs earlier this year, climbing over 39% in the first quarter alone. So, what's driving this boom? Banking stocks like GT Bank, Zenith Bank, and Axis Bank have delivered strong earnings. Telecom giants like MTN and Airtel have seen growth from increased mobile data use. Oil, gas firms like Owando are benefiting from higher oil prices. And the Central Bank of Nigeria raised interest rates to 27.75%, attracting local investors. The market is now worth over 74 trillion, roughly 50 billion USD. But it's not all rosy. Nigeria faces some tough challenges. Inflation is over 30%. The naira remains unstable. Borrowing is expensive for local businesses. Yet despite these risks, investors, especially locals, are seeing opportunities. The Nigerian market is volatile, but the potential for high returns is drawing in serious capital. In fact, in 2025, Nigeria outperformed the US, UK, and Japan in terms of returns. That's a big deal. Next, we move to the United Kingdom, home of the FTSE 100 index. This index includes the 100 biggest companies listed on the London Stock Exchange, including Shell, HSBC, BP, and Unilever. The UK economy has had its challenges in recent years: Brexit, rising energy costs, and inflation. But the FTSE has proven resilient. In 2025, the index is stable, supported by high dividend-paying companies, global oil and mining exposure, Bank of England's careful monetary policies. The FTSE doesn't grow as fast as tech-heavy markets like the US, but it's considered safe and reliable, especially for long-term investors who love dividends. Finally, let's look at Japan. The Nikkei 225 index tracks Japan's biggest companies like Toyota, Sony, and SoftBank. Japan is the world's third largest economy and has recently been gaining momentum. The Japanese yen is weak, making exports cheaper. Manufacturing is growing again. The Bank of Japan continues to support the economy with low interest rates. Investors are watching Japan closely, especially with its massive tech and semiconductor industries. The Nikkei has risen over 15% this year, driven by strong export demand and investor optimism. So let's wrap this up. The US market remains the global leader, stable, deep, and tech-heavy. Nigeria is the breakout star, fast growth, high risk, high reward. UK FTSE offers income and stability. And Japan's Nikkei reflects Asia's industrial and export power. These markets tell a global story of recovery, innovation, and opportunity. Which one are you watching most closely? Drop a comment below We'd love to hear from you. If you enjoyed this video, do us a favor. Hit that like button, share this with a friend, and subscribe to Sheddy Media for more finance content made simple. Thanks for watching, and we'll see you in the next one.